there's a new order, there's usually some fight. And then when that begins, it's sort of a great equalizer. And capitalism is a fantastic enabler, because what it does is it gives people who may not have anything, who have good ideas, capital, so they get the resources to pursue that, and that's a fabulous thing. And then as it rises over a period of time, you'll see debt to income ratios rise and so on, because everybody gets more funded. And then also you see it naturally distributes wealth unequally, and it distributes opportunity unequally. As that wealth gaps rise and widen, and then also parents who have wealthy parents can educate their children in an unfair, let's say an unequal way relative to others. And so, but it gets overly indebted. And then because all this buying power, which comes in the form of debt, is somebody else's assets, then what happens is, then you lower interest rates, you try to stimulate it. So for example, since 1980, every cyclical peak and every cyclical trough in interest rates was lower than the one before it, so that they can stimulate more debt. And then when you get to zero interest rates, that doesn't work. So they have to print money and they buy money to get that pile going up. And that creates the cycle, okay? So there's part of that cycle which is a capital markets and then with that, there are also conflicts. Conflicts that are the wealth conflicts, and related to that, the political left and the political right, and then that creates the dynamic that we're talking about.
Okay. Now, you've cited in your book two examples where this has happened before. One is in the Netherlands, where the Dutch economy, ultimately, they had the only reserve currency, at least in Western Europe, the guilder, and they did some of what you now say we're doing. Is that right?
They had, in the beginning, big education. They won a war. Then they became very competitive. They went out in the world taking their goods, and they built ships that were the best ships around the world, so they can go anywhere in the world. They brought their arms with them, and they made a fortune. And with that, they brought their currency. And as they bring their currency, because it's a world currency, a reserve currency, others want to own it. And because others want to own it, because that's buying power, it's the common wampum, and then because of that, then they lend it to the Dutch. So in other words, Americans get lent money because others want to hold dollars, and then that allows us, that's the exorbitant privilege, to get more and more in debt. And then what happens is they lose their competitiveness. The British came along and copied from the Dutch and found, oh, they could make ships better and cheaper. And then they became the competitors. And then as the competitors are operating, they take market share away, quite similar to lots of technology companies and what's going on now. And then what happens is then they get more in debt, and then they have the other cycle that's operating, and then you have the challenges of that.
We came along, the United States became the biggest economy in the world around 1870, and since World War II, we've been the dominant economy. So now we have a lot of debt, 29 trillion. So how are we going to pay off that debt, by the way?
In the end, it's always print the money. Okay. You know, it's always print the money, because you see, one man's debts are another man's assets. And so if you're holding a bond and you receive you don't get compensated for inflation. Let's say people think cash is a low risk investment. Well, they're earning no interest. And when you have a 7% or a 5% inflation, you lose 5% of your buying power. Or if you're owning a bond, you have the same thing. And so what happens is, not only is there the debt that is coming from the new debt created to run the deficits, but there become sellers of that debt, because the owner, as an asset, it's not a good asset. And then there's so much selling. And what that means is that you either have to, interest rates have got to go up, and then that grinds things down to a close, or what they do is they have to print money. And so the history of all of these cycles is that the coffers are empty, because you can't continue to spend more than you earn and give it to somebody, expect them to like it, and then you devalue it, and that becomes the cycle. I think if we go back and we look at history, there are three main things that you can do, okay? First, as a society individually and then collectively, how do you earn more money than you spend? The second is internal conflict or cooperation. Can you have internal cooperation because you realize what the consequences are. So I think that in the 2024 elections, there is a reasonable chance that neither party will accept losing the elections. And that is something that means that democracy, or a type of civil war of sorts, could develop in a way, this is realistic, I'm not being exaggerated by that. And when one looks at those types of things, there is a worry that one should have about the divisiveness and what it means for each other. And the same is true internationally. I have a principle. If you worry, you don't have to worry. And if you don't worry, you need to worry. And what I mean by that is, if you worry and you start to think what this direction could be and what it's like, then maybe you deal with the things that prevent those worries, where if you don't worry, maybe you get into trouble without worrying or with a confidence. There are things we can do. The world has now more resources than it has ever had.
Those who have money have power. That power has to do with all that they can buy, but it also has the ability to influence those with political power. And so you see this throughout history, this symbiotic relationship, for example, between the royal families, the nobility, and the church. In 1668, after 30 years of war, the development of nation states. Before then, it was really the development of countries as we know it, that there were borders. There are two orders. There's an internal order, that is the internal governance system, and it's usually set out in a constitution or some agreements. And then there's the world order. So, for example, in 1945, at the end of a war, which is basically a fight for determining the world order, the winners of the fight got together and created the world system as we now know it. 44, they created Bretton Woods monetary system that determined the money, pretty much. And because the United States won and had 80% of the world's money, gold was money then, and it has 80% of the world's gold, and it was half the world's economy, and it was the great military power. The order was built around an American world order, so that the United Nations was in New York, the World Bank and the IMF were in Washington, and they built that new order. So classically, you have a war to determine whose rules we're following, and then you have the new order being constructed. After that, there is usually a period of extended peace and prosperity. Peace suits prosperity, and so there's not, and the reason you have the peace is because no one wants to fight with the dominant power. You know you're going to lose, you've surrendered. There's been the surrendering. They carve up the world, they say what it's going to look like, who's going to control what, and then you come into that period of peace and then prosperity, where then there's a working together. Usually at that point, you've wiped out a lot of the debt, you've wiped out a lot of the issues, the class warfare and so on, and then there's good working together. So those great periods, such as the Industrial Revolution in the late 1800s, or what we've experienced in the post-World War II period, are peaceful and prosperous periods led largely by the dominant world power. Over a period of time, since really 1500, and maybe before, but really 1500, when the Dutch invented capitalism. And what I mean by that, they invented the first capital markets, the first stocks and the first stock market. Since then, capitalism has been an effective tool for building wealth because it got resources into the hands of inventive people. That's when we moved from agriculture to the importance of inventiveness of people. They got resources. In that process of doing that, they create wealth gaps naturally. Those who make a lot of money make a lot more than those that don't. And it also produces opportunity gap because, for example, those who earn a lot of money, have that wealth, they have the power to educate their children in a way that others don't, and the gaps grow. And also the debts grow at that time. And when you have a world reserve currency, that allows you to borrow a lot of money. because those who want to save want to hold your money, and that means that they'll lend you money. And so those countries get deeper into debt. So you see that they gradually lose their competitiveness and they get themselves into financial circumstances which are not good, and they have large wealth gap, which set the stage for downturn. And when they have downturns, the first question is, do they have enough money? And traditionally, money is resources. So you classically see that the coffers are bare, that they're spending more money than they are earning, and they run out of money in the coffers, and their granaries are empty rather than stocked, so that they give them the buffer. And as that deteriorates, that worsens conditions. And if they have a rival power that's also challenging them, they see greater internal conflict over wealth, and then they have the problems internally and the problems externally, which usually results in an internal war or an external war that leads to the change to the New World Order. There are cause-effect relationships. Everything that happens has reasons, causes that preceded it, that made it happen. And so by having all those in numbers, one can see the probabilities of certain things happening. In many cases, the conflict that produces the revolution produces revolutionary changes that lead to resolution and lead to new starts. And so their a short-term civil war is a hellacious experience. And at the same time, it can be the transition to a new beginning. Also, there are different types of conflict. Competition, which makes everything better, is a productive conflict, whereas destructive conflicts are not good over the short time. So, that's how those go. The most important leading indicator is the quality of education. Most importantly, broad-based education drawn from the largest population, because you can never tell who the talent is going to be, so where they're going to come from. So, for example, if you look at the Chinese dynasties, the great Chinese dynasties, and the Confucian approach, it was meritocratic of everybody could sit for exams and so on, broad base of drawing in the populations. And you see that if you go across societies, because that draws on the largest number of population to get education, and it also creates a reality and a perception that the system is fairer, equal opportunity, not just one of privilege, and that helps to create social stability. But education is not just education in understanding facts and so on. It is education in civility, of how to behave together. And so if they're smart, they understand how to be productive because they work well together and they're productive. And then that leads to the next stage. You could see in the lines in the chart, I plotted these so that you could see in a typical cycle, you could see that education is the long leading indicator. And then you could see, as you mentioned, that what you see is inventiveness and technology measures then follow. And you see then also competitiveness and world markets follow. For example, in the early stages of a cycle, the industries that they go into tend to be very basic industry because they have cheap labor, something like textiles and simple manufactured goods and so on. But as the education rises, then they move up value chain to greater technologies and so on, which raises incomes and raises productivity. So yes, as you say, there are 18 different measures like that, but education and then civility and the inventiveness. So you see it reflected in who's inventing what. And that corresponds then who's a big trading country, and where's the value of economic output and what are per capita incomes. They all follow those